Most useful banking interview that I had, I got cut from, and it wasn't even real. I was interviewing for some of the most competitive investment banks in Wall Street, Centerview, Catalyst, Morgan Stanley, and I was super nervous, but super on top of it. I was doing as many practice questions as I could. I was using OFFERGOBLIN. I was doing mock interviews. And one afternoon, I had a mock interview scheduled with a second year MBA. And right from the jump, this dude is just hostile. He's just hammering me with like accretion dilution problems, paper LBO, like just the most advanced technicals possible. And I was doing good. I was going toe to toe with him. We're going back and forth. I'm thinking, yeah, I got this. I'm like pretty good in the swing of things. Then he asked me to explain the cash flow statement in as much detail as possible. And when it got down to it, I actually didn't really understand the fundamentals. And he just like stopped the interview right there. He told me that I was cut. And that was the end of the conversation. It felt awful. I went heads down and studied accounting super deeply after that and ahead of the super days that I had. And the result was great. I had a really good fundamental understanding coming into my super days. I got an offer from Centerview. And so I think that one of the most important things that you can do in preparing for investment banking interviews and probably finance in general is really to grasp that accounting. Without accounting, you cannot get an offer. It is the gate that you have to pass through in order to get to the desk. So we're going to talk about that today from the ground up. If you're new here, my name is Michael Neal. I'm the founder of OFFERGOBLIN, Centerview. I make videos on how to get into investment banking. And the focus of this episode is going to be on the 3 financial statements. It's part of a series of technical videos, the purpose of which is to develop an intuition for how to think about finance, which will really help you to be able to answer interview questions if they go off the rails. One quick thing, there's a companion to this video, so it'll be a guide with some sample questions so you can see how banks actually ask questions about the 3 financial statements. You'll find that in the description below. This episode is going to have 4 parts. The first part will be an overview of the 3 statements, and then income statement, cash flow statement, balance sheet. Midway through, we're going to go through a super day question so you can get a sense of how banks actually ask questions about this topic and what a response would look like. And then at the end, we're going to do a very quick, like 45 to 60-second response to how do the 3 financial statements link, which is a question that you're almost guaranteed to get in an interview. So stick around. So let's start with an overview starting from 0 of what the 3 financial statements actually are. This is a standardized set of reports on what a company earns, owns, owes. It's essentially the building blocks of investing, investment banking, and finance in general. The reason that they're standardized, or what's nice about that, is that you can compare different companies' performances line by line. And that's where a lot of analysis comes from and a lot of the finance industry sits. So every company, public company, is required to publish a 10K annually and a 10Q quarterly. Those are public and free. That's on SEC's EDGAR database or the company's investor relations page. And the 3 of those in order, just so that you have them in your mind, are the income statement, which think of that in the middle, the cash flow statement, think of that to be on your right, and then the balance sheet, think of that to be on your left. And so we're going to go through each one of those now. And the company that we're going to use as an example isn't going to be a fucking lemonade stand or Apple. We're going to just talk about a company that builds and sells rockets. An income statement answers one of the most critical questions about a business. Is it making any money? The way that it's structured on the top is revenue, and that's just all the money coming into the business. And line by line, you see costs being peeled out until you hit these different checkpoints throughout that statement. Those checkpoints represent profit at different levels of the business. And so as you work your way down, you can kind of see how well that business actually runs and how much of that revenue actually works their way down until it actually gets all the way out to the people who own the business. This is a great scoreboard for telling whether the business is growing, whether its model worked, and whether it's profitable or not. Every argument about how well a business is doing has to incorporate the income statement to that. So every income statement that you will ever look at has the same 4 subtractions. from top to bottom with our rocket company. So we start with revenue, and that's the top line. And that's literally where the phrase comes from. That's what you've earned in the period, and it's not what you've collected. If, let's say, you've delivered your rocket in March, but the cash arrives in April, that revenue would be recognized in March. That's the concept called accrual accounting. The first thing that's subtracted from that is going to be the cost of goods sold. And that's the direct cost of building the rockets, for example. So that's going to be fuel, engines, steel, and that takes you down to gross profit, which gives you a sense of whether the actual production of the product itself can be profitable. We'll talk more about that in the margin video next week. Then operating expenses. So that's the cost of actually running the business. So those are salaries, rent, marketing, all of these other things that I like to think of as overhead. That's when you get to the actual operating profit line item, which is EBIT. That's earnings before interest and tax. Then you subtract out interest, and that's the cost of your debt. And that's what gets you down to pre-tax income. So after that, you'd subtract taxes from that. And that brings you down to net income, which is the bottom line. That's the owner's profit. So when people say, oh, this is hitting my bottom line, they're talking about the actual profitability of a business. So once you've subtracted those four things and you get those four profits, each one tells you something a little bit different about the business. And now I'll give you a trick for handling that live in an interview. Okay, this is a critical investment banking interview tip: how to get any question right about the income statement. So usually these questions come through with some kind of change, like revenue has changed or costs have changed, and they'll ask you, how does that affect the income statement? And the mistake that a lot of people will make is they'll go line by line through the statement. It'll be super boring. It'll drag out. A lot of the lines don't even change. And you need to get an answer really quickly, and you want to be more simple, direct, and concise about it. So the way that you're going to think about this is in three parts. First, you're going to think about pre-tax income, then tax, and then net income below that. And what this will allow you to do is sort of bundle together impacts into the form that gets you quickly to the math that you need to do. So if revenue goes up, pre-tax income goes up by 10, then you tax affect that, and then you bring that down into net income. If the operating expenses go up by 10, similarly, like pre-tax income goes down, the tax that you pay on that goes up, and et cetera, right? So this tip will allow you to be able to answer questions more quickly, more accurately, and effectively in your interviews. All right, so we've worked our way all the way down the income statement now to net income, and that's going to be the first line on this next statement, which is the cash flow statement. So the purpose of the cash flow statement is to add and subtract cash and to show how cash moves in and out of the business. And that's broken out into three sections. The first section of the cash flow statement is cash from operations, and that's cash that the business itself actually threw off. So there's two main pieces of that. The first one is non-cash expenses. So those are things that we're actually going to add back to the net income. So let's say depreciation, which would be recognized on the income statement. We wouldn't recognize that here. We're going to add it back. We didn't spend any actual cash on that expense. The second one is working capital. And most of that has to do with timing, because maybe for expenses that we recognize in the income statement, we actually bought that inventory last year, in which case we would be adding the cash back to represent that we didn't actually need to spend cash on that this period of time. So net income plus those non-cash expenses plus the changes in net working capital is what gives us the actual cash from operations, and that carries into the next section on the cash flow statement. Okay, so cash from investing is investments that you spend to build out the business. So think about that as like we built a factory. We would have to spend money to build that factory. That wouldn't have been represented in the income statement just yet. It would show up over the next several years in depreciation. So cash leaves here once typically, and then the expense trickles out through the income statement through the course of a few years. So we're selling a building, we're buying another building. Those are also investment decisions too. It's not always a negative movement. And that gets us through the cash from investing section. The last section of the cash flow statement is the cash from financing. And that's basically people funding you or you paying out those people. So for example, if you take on debt, that represents cash coming in, or you take on investors, that's cash coming in. Let's say then you pay down debt, that would be cash coming out, or you pay dividends to your stockholders. So none of those are really about running the business. That's more about who is kind of funding the business. And Once you kind of get to the bottom of the cash from financing and you add all of the sections together, that's when you get the net change in cash, which is the bottom of the cash flow statement. This is a super day question from Jefferies, and I've crashed out on this question before, so I want to walk you through it. Walk me through a cash flow statement. So we're going to start at net income. We'll go into cash from operations where we'll be adding back non-cash expenses, and we'll add or subtract changes in net working capital. Then we'll go into cash from investing where we'll add or subtract investments that the business has made on itself, CapEx and things like that. And then we'll go into cash from financing where we'll represent inflows and outflows of the funding of the business itself. And when we add through all of those things, we land on the net change in cash at the bottom of the cash flow statement, which then goes over into the balance sheet. So this is a real question on OfferGoblin. We'll have the link in the description. You can see the answer fully fleshed out with a deep dive into all those details. The last financial statement is the balance sheet, which has 3 sections: assets, liabilities, and equity. The balance sheet is a snapshot in time, which tells you essentially what the business owns, who it owes, and what's remaining for the owners of the business after all of that. Okay, so here is the investment banking interview balance sheet. There's 3 sections to it. The first is assets. The main line items there are property, plant, and equipment, which is essentially physical items that the business owns, and cash, which is impacted by that net change in cash from our cash flow statement. The second is liabilities, and that's money that the business owes outward. So it could be debt, it could be accounts payable, vendors that they need to pay out, things like that. And the last is equity. Equity is what remains after you take assets minus liabilities. It's essentially what the business owners actually hold when it's all said and done. And the main line item here is retained earnings, which is the accumulation of net income over time. The main thing to remember for an interview is that assets equals liabilities plus equity. And anytime you bring up the balance sheet in an interview, you need to say that formula and say that the balance sheet balances. This is probably the most critical investment banking interview question. How do the 3 financial statements link? You will get this question in coffee chats, in first rounds, in super days. If you can't nail this question, you're basically going to be cut right away. And the way to think about it is always to flow from income statement to cash flow statement to balance sheet. So income statement, we have revenue and we end at net income. Net income then becomes the top line of the cash flow statement. The cash flow statement is a series of additions and subtractions to get to the net change in cash. On the balance sheet, we have assets, liabilities, and equity. Within the assets section, we have the cash section, which is going to be impacted by that net change in cash from the cash flow statement. And then in the equity section, retained earnings is going to add the net income from the income statement. So in this way, all of the 3 financial statements are linked. And that's the end of the episode. Hopefully you've learned something here, developed a little bit more intuition. We've got a bunch more practice problems in the description. I would recommend that you start out with the Goblin 100 practice mode so you can kind of go through questions in order to ramp up your technicals. If you're a little more advanced, you can jump into Goblin mode and basically it'll find where you are, what level you're at, and keep testing you and pushing you into the more advanced questions. So feel free to tune in next week. You can like and subscribe if you found this useful. I'm Michael from OfferGoblin. See you next week.